What's going on, guys? This is Jan back at you with a new crypto video. Today we're going to look at the market and do an analysis to see where Bitcoin can go in the next couple of months, whether it's going to go higher, sideways, or just drop like a rock. So to do this, we want to go back to 2013 and understand how the Bitcoin trends work. In the previous videos, if you guys seen, I always talk about when a trend restarts, it always goes back to previous resistance as new support. If you can see, this is 2013, right? So we had a quick trend right here. We had a bit of a bear market for a couple months and then a new trend. The bear market over here from 2014 through 16 made new support at the resistance of the previous trend. So right there, let's make that line a little bit thicker so you can see it a little bit better. All right, so here's the resistance, right? We broke out here. Now it became support. This was the entire bear trend for about 2 years, from 2014 to 2016, 17, when we started a new cycle. Now, right over here, you can tell that it is accumulation right in this area. It's right in this area right here is accumulation. Same thing right over here. You see it's all flat. It just goes sideways. Okay, all it is sideways movement after a big crash. And how big are these corrections? Let's see. We're gonna measure them. I'm gonna measure both these corrections. So we want to sure. And by the way, guys, this is Coinigy. It's a paid program. It's similar to TradingView. If you don't want to pay, you can go to tradingview.com, or you can go to coinigy.com. I'll give you a link in the description. This one's maybe $20 for the whole year, but it's fantastic. TradingView is free. It does the same thing, but it's just not as good. So let's measure this move, okay, from the top to the bottom of this trend. That was a 82% correction, okay, and top to bottom, see there's the bottom right over there. That was an 86% correction, okay, both times. Now let's look at the current trend. Absolutely insane, right? Now remember, this trend after the bear trend made support at the previous resistance of the previous trend. The resistance was 220 and that became support. Now where's support right now? Support right now is at 815, the very maximum support level. I don't think we'll get there, but based on this, what happened recently, what happened to the prior trends, that is the very possible bottom support. Now let's check out what Bitcoin did. All right, remember 86. This was an 82% correction, 86% correction. Let's see what an 86% correction would look like. 73, 86 would be right about here, $2,500. Now, I'm not saying this is going to happen, but like I talked about in previous videos, trends and market cycles always work the same way. And we really don't have any support right in this area. The 6K, we already hit 6K. If we hit it again, there's no such thing as a double bottom. If we hit a double bottom, it's about 98% certain that we're going to break lower. And the next step after a breakdown of 6K, let's say we break 6K, right? We come down, consolidate. Next level is going to be $4,800. Okay. Now, because there's a lot of money in Bitcoin, it's very liquid. It's not going to go straight down. Okay, is just not going to go down like this. Okay, there's way too much money. People are going to be buying. If it goes down that low, I'll bring it back up. Trust me. Okay. I did notice something really interesting looking at this trend and the previous trends. Let's look at 2013 really quick and see what could be playing out here. Okay, so here's the chart, 2013, and we have something similar playing out here. We had a bounce, right? We had a dead cat, and then we had a bounce And then we had some consolidation right over here, just above the low, right over here. And then we broke down to the next level, right after this small consolidation breakdown pattern. Um, See, we never get a double bottom. Like if we hit it a second time, it's gonna break down, right? Um, and we broke out of this triangle right here. However, just slightly, okay, just slightly. Then we bounced back up, and then we had a dead cat bounce. This probably made traders so frustrated because they thought, all right, brand new trend. We have an inverse head and shoulders, and then it broke down on them. And then we had a slow grind for quite a while until we established accumulation right here. Just sideways movement, the most stressful, the most boring. This is where a lot of people exit right here, where they're just like, I can't take it anymore. It's just falling and falling and falling, and this is called capitulation. That's why we have this big red candle, bigger than all the other candles, except for the ones that have the biggest drops. All right, this is when you know this is a capitulation candle. And right here, this green candle tells you that it's the start of a new trend. It's bigger than any other candle. This is where you'd be buying for sure. Okay, so looking at this, let's say this is 6K. This is the 6K bottom, and we have a triangle similar to this one playing out right now. If we break down below that triangle, my first target of support is 48. I think like 48.50. Let's go back to the current trend. Okay. Okay, so if you remember the chart that we just saw right now, we have this triangle, right? And we had a bottom over there on the previous chart where we had consolidation and kind of a breakdown pattern right before this bottom. Now, breakdown below this triangle has some support right in this area. It's about the 4,900 level. And I think because we're breaking down so sharply, what we could see is something like this, right? We go into this area, the 4,900 area, and what could happen is, I'll give you guys an area right there, like a target area, right? If you were gonna buy in, because this does not look like a bottom. A bottom is always like this. It's super sharp, right? It's super sharp, and the comeback is immediate. Okay, it really rarely just rounds off like that. Okay, this tells me that we're gonna break down further, and of course anything could happen. We could round off. We would just slightly, and then go back down. Maybe we break out for a little while, and then kind of slowly grind down. But the worst thing that could happen is a slow grind. The best thing that could happen for us is a huge crash, another capitulation, where we could just buy in and not have to deal with the slow grind down, because that will be the most frustrating. It's untradeable. You can't make any money in it. You can't even short it because you'll be racking up fees just waiting for that long period of time. So the best scenario, a very likely scenario, what we could see is a capitulation, drop down here, we break out of this triangle. And remember, we've been in this channel for quite some time now, right there. Okay, if we really bounce off of this, okay, and what we saw in 2013, right, we bounce off and then we break out of this channel, and then we kind of bounce around over here for a little while. Oops. Just like in the previous one, where everybody thought it was a new trend. It broke out, did a huge bounce after a huge crash just below the triangle, and then it just kind of slowly faded away, right? Slowly faded away and kept crashing. Now remember, we don't have any structural support right in this area. The real support is about right here. Okay. A lot of companies are really implementing blockchain technology within the company, and price the last couple of years has definitely outgrown that technology implementation. But now we've reversed, and the technology is now outpacing the price. So this tells me that we're going to reverse pretty fast. Whatever happens, whatever crash, whether it goes down here, whether it kind of slowly bleeds out, it's going to reverse pretty quick, and we're going to be back on track within, maximum 8 months. But I think it's going to take less than that, maybe 3 or 4 months, and then we'll be back on track. All it's going to take is for us to break out of this channel. Okay. Let's hope that it crashes. We rip off the band-aid, and then we'll be back on track. At least to get a bounce, at least to exit some positions. I know a lot of people have been bag holding. This will give them a chance to exit the markets. And we need to build the strong support. Okay. If this, this is the ultimate support. If it goes down to 900 bucks, I don't think it will, but I'll be buying as much as possible. Whenever you think crypto is dead, when everybody pukes out the positions, when you see the biggest red candle, when you see something like this, right? You see a candle like this, somewhere over here, the same size, that's going to be the end. That's going to be the end of the bear trend, and that's capitulation where the trend is going to reverse. I don't see that yet. Okay, I don't see any of that yet, because remember, when we see the start of a new trend, we see accumulation beforehand. Okay, we see that every single time. I don't see that here yet. Okay, until we see a couple months of just sideways movement, I don't see a reversal yet. Okay, so we definitely need to somehow get into an accumulation, whether it's just sideways movement now or a drop. Let's see if we can get this thing over here. All right. So we have this, just like previously, we had that over here. We had the accumulation every single time a trend reverse. Before a trend reverses, and we are certainly in a bear trend. Before a new bull run starts, we need accumulation, something like this. Okay, something like this. I assume we're gonna break out of this channel and trap a lot of people that are thinking it's a new trend, but they don't know that every new trend requires accumulation. Okay, otherwise it's not a healthy trend. It's gonna fall apart really fast. So if we do get up here, my strategy is to get out of a lot of positions. I will keep some. I always keep some on the table. And even right now, I'm loading up a little bit on altcoins. Altcoins are pretty much flat, and even if we just go sideways, okay, we don't crash, we don't go up, we just go sideways. I want to have a couple bags ready, but I'm definitely not going all in on markets. I'm not even putting more than 30% of my money into the markets right now. I'm waiting for something like this to happen, either a crash, a bounce, and some kind of accumulation, and then we can start a new trend. Okay, and then we can start a new trend. Those are my ideas for the market of 2018. I think I don't think it's going to take too long. I know on the chart it says 2019, but let's just move that closer, right over here. And I don't think it's going to take too long before we reverse and see some action in cryptocurrencies. A lot of companies are implementing blockchain. This is going to be a huge financial revolution, and this might be the last time. This next cycle, I think, is going to be the last time that you can make some serious returns on your money, like 1,000 times, 10,000 times. Of course, you got to be lucky. You got to be smart about what you're buying, but I think it's going to be the last chance you get. So study up, do your research, continue learning, okay, and really save up as much money as you can until you see a huge crash, and that's when you buy. All right, guys, if you enjoyed the video, I would appreciate a like, a comment. I'm going to try my best to get back to all of you, and I'll get back to you with a good answer so you learn as much as you can. And stay tuned for the next videos. I'm super excited to teach you guys. Cheers.